Let's talk about claiming a non-citizen spouse and children on your taxes. So here's the overview I want you to pay attention to. So the thing is that let's first talk about why you claim them. The thing here is that for tax years prior to 2018, for each person listed on your tax return, your spouse, and any children or other dependents, you can subtract a certain amount for your taxable income, right? So this amount is called an exemption. And for the 2017 tax year, is actually about four grand. Okay. Now, beginning in 2018, dependent exemptions are no longer used in calculating your taxable income. So, however, there are other deductions and credits that have been adjusted to lessen your tax burden after the elimination of exemptions. Okay. Now, let's talk about resident and non-resident aliens. How you claim a non-citizen spouse on your tax return depends on your spouse's residency status and whether or not your spouse has a social security number. Okay, so your spouse will be either a resident alien or a non-resident alien. So usually for a non-citizen to qualify as a resident alien, they need to meet one or two tests, and only two. The non-citizen has a green card, which is basically an authorization form from the federal government to live and work in the United States permanently. So the IRS refers to this as a green card test. Okay, remember that. So the first test is the green card test. And the second test is that the non-citizen was in the United States for at least 31 days of the year and at least 183 days during the 3-year period that includes the current year and the 2 years immediately before that. Let me repeat this. The non-citizen was in the U.S. for at least 31 days of the year and at least 183 days during the 3-year period that includes the current year and the 2 years immediately before that. So the IRS calls this the substantial presence test. So you have only two options here, okay? So anyone who doesn't qualify as a resident alien is considered a non-resident alien. So next time you think about resident and non-resident alien, think about the green card test and the substantial presence test. Question is, which one do you see yourself or do you see your spouse in? By the way, boss, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. You are going to enjoy today's conversation. Now let's talk about the spouse's tax status. In general, resident alien are taxed just like U.S. citizens. So you will list a resident alien spouse on your return and provide his or her social security number. If your spouse is not eligible for a social security number, they will need to apply for an individual tax identification number, an ITIN, from the IRS. And if your spouse is a non-resident alien, you can treat your spouse as a resident alien for tax purposes. And if you choose this option, though, you can file a joint tax return with your spouse and have an increased standard deduction. And you increase your standard deduction, but all your spouse's worldwide income will be taxed by the United States. Okay, this is really important. If you do not choose this option, you may be able to use the head of a household filing status as long as you have paid more than half the cost of maintaining a household for certain dependents or relatives other than your non-resident alien spouse. So this is really important. Now, consider your spouse's worldwide income. So it's one of those things where you have to really be very careful here because you can say, well, I live in the States. I'm filing my tax returns, but I'm actually paying taxes on everything I have collected from all geographies. Okay, but it's really important to understand that basically the easiest way, like one thing I want to say here is that if you have a foreign-born sort of spouse, pay attention to your tax situations, okay? Because for long-term tax planning, this might not be the most beneficial move. In other words, it's just better to sort of officialize things in the States and really do it the right way going forward. The thing here is that the money you would save might be less than the additional tax you will have to pay because all of your spouse's worldwide income will be subject to U.S. tax. Okay, now every case is different. So it pays to run the numbers using different options and see what saves you the most money. It's one of those things where if you have a question, please let us know in the comment section and we'll answer you based on your specific situation. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about claiming a non-citizen spouse and children on your taxes. Now let's talk about non-citizen dependent children. So you can claim a non-citizen child as a dependent on your tax return, which would likely entitle you to a dependent credit if the child meets the IRS definition of a qualifying child. And I'll talk about that definition later on. And so this is the same standard that applies to children who are citizens. So your child is a qualifying child if all the following apply. You remember, I said all the following apply, not just one or two, all. So the child is your son, daughter, stepchild, foster child, brother, sister, half-brother, half-sister, step-brother, stepsister, adopted child, or a descendant of one of these, such as a grandchild. Adopted and biological children are treated the same. And on the last day of the year, the child is either younger than 19, a full-time student, younger than 24, or permanently and totally disabled. The child lived with you for more than half the year. You provided more than half of the child's financial support during the year. The child did not file a joint tax return with his or her spouse, if married, except only to claim a refund of taxes withheld or estimated taxes paid. And also, the child must be a U.S. resident alien, U.S. national, or resident of Canada or Mexico. So if you're a non-citizen child dependent does not have a social security number, you will need to obtain an ITIN. So again, the procedure is kind of similar here. You would need to obtain an individual taxpayer identification number from the IRS for him or her. And the thing here is that every situation is different. So if you're listening to me right now, or you have more questions than answers, you have two options. You can really sort of let us know in the comment section. You can ask your questions and be very specific, and then we'll answer you. Or you can just contact a local tax attorney or a local CPA or a local tax preparer to kind of help you out. Or you can actually just use a tax preparation software to sort of resolve your situation. It really depends. So you can either use an EA, a CPA, or a tax attorney. Or you can just ask us questions and we'll definitely answer you. Not a problem. Let me give you a few pro tips here. So the thing is that, can you claim someone as a dependent who's never lived with you? The answer is yes. The person doesn't have to live with you in order to qualify as your dependent on taxes. However, the person must be a relative who meets one of the following relationship test requirements. I just said this a while ago, but I'm going to repeat it because this is so important. So when we talk about the relationship test requirements, the person must be your child, grandchild, or great-grandchild, your legally adopted dependent, your stepchild, stepbrother, or stepsister, your brother, sister, half-brother, or half-sister, your parent or other direct ancestor, but not a foster parent, your stepfather or stepmother, your parent's brother or sister, your brother's or sister's child, your mother-in-law, father-in-law, brother-in-law, sister-in-law, son-in-law, or daughter-in-law. So there are additional rules for the person to qualify as your dependent. To qualify as one of your dependents, all of this must be true. So the person must not be the qualifying child of any other taxpayer. The person must have gross income less than $4,500 for the year. Next year will be $5,000, $5,050. You must provide more than half of the person's total support for the year. So this is important. You must provide more than half of the person's total support for the year. And the person must be one of this: U.S. citizen, U.S. national, resident of the United States, Canada, or Mexico. And on top of that, the person must not file a joint return unless he or she is only filing to claim a refund of estimated taxes or income taxes withheld. Also, there will be no tax liability for either the person or the person's spouse if filing separate returns. So you can see that the conditions are a little more convoluted when it comes to qualifying for this. But it is totally possible. Long story short, you can claim someone as a dependent who has never lived with you, but just make sure that you have taken care of all the conditions that I just listed, and that there are no questions, there are no sort of strings attached to that person, so to speak, so that you can freely sort of claim that person, okay? And it's always great to do a little sort of due diligence before you file this, before you actually claim this person on your taxes. Do a little bit of investigate a little bit to see what's really happening. Boss, I want to quickly remind you of today's topic. We're having a conversation about claiming a non-citizen spouse and children on your taxes. Let me give you a bonus here. So basically, how to claim a non-citizen spouse and children. It's very simple. So if your spouse and children are U.S. citizens, it's very easy to claim them on your tax returns. You just provide their name and social security numbers. It can be a more difficult to claim non-U.S. citizen spouse or children on your return, but you are still able to claim them and take advantage of the tax benefits. Okay. Now, each person that you claim on your tax return will impact your taxable income. Very important. And so it's one of those things where you have to know exactly what's really happening. Now, the thing here is that we have resident and non-resident aliens, and we also have your spouse's tax status. We have dependent children that are non-citizens. Let's first talk about residents and non-resident aliens. So your spouse's residency status will determine how you can claim them as an exemption. Your spouse can either be a resident alien or a non-resident alien. So this is really important. I think I've given you the two tests that you really need to sort of go through, so I'm not going to give them to you again. So this is the substantial presence test and the green card test. Okay. So if your spouse doesn't meet this criteria, then they are considered a non-resident alien. So your spouse's tax status is very important. Generally, all resident aliens are taxed just like U.S. citizens. You just list your resident alien spouse on your tax return and provide their social security number. If your spouse does not qualify for a social, just get an ITIN, not a problem. What about dependent children? There are non-citizens. Well, it's one of those things where you have to really see exactly if what kind of situation is good for you, right? I already told you what it means to be a relative, the relative test, and you got to really meet that also, and you have to meet this all the time. But remember, it's not about actually. Don't wait until the last day of the year to start taking action. Okay, if you're listening to me right now, maybe it's already late for this year, but next year you want to prepare. You want to take all actions. For example, you want to apply for an ITIN right now. If somebody doesn't have a social, you want to get the ITIN as soon as possible. Don't wait until the last minute, because otherwise you won't have time at all. Here is the approach I want you to really pay attention to in terms of let's talk about how to file taxes when marrying a non-U.S. citizen. Okay, so married or married to a non-resident alien, the filing status is kind of different. Okay, now the IRS defers to state or foreign law to determine where you have a valid marriage. In most cases, a marriage in a foreign country is actually valid for U.S. tax purposes. The question is, can you file single if married to a non-resident alien? Generally, no. You cannot file single if you are married to a non-resident alien. Married individuals are not allowed to file under this single filing status, and when you are married to a non-resident alien, referred to a non-resident spouse, you are also unable to file a joint return unless a separate election is made to do so. So here are the options when you are married to a non-U.S. citizen. You should consider the options carefully, as each will have a different effect on your tax and reporting requirements. Let's first talk about filing married separately. Okay, so the default filing status for a U.S. citizen married to a non-resident alien spouse is married filing separately. So while the married filing separately filing status does not pose any additional hurdles for getting your return easily filed, it does come at a cost. So the biggest downsides to married filing separately for a resident or a U.S. Citizen spouse is the loss of some potential tax credits and deductions and overall higher tax rates. So it's one of those things where you have to see what really works for you and whether you need to officialize your non-resident alien status as soon as possible. Because if you are married to a non-resident spouse and do not have any dependents to claim, this may be the only filing status available to you. Okay, so the married filing separately could be the only filing status available to you, but it is a very costly sort of status. So not only in terms of, because see, you'll be living as a married person, But when it comes to taxes, the IRS will not recognize that sort of status for you, that sort of profile for you. So you'll be spending money as if you were married, but for tax purposes, you will be filing as if you were single. So it could be could be a big bummer. Let's talk about the second option. So filing head of household. So really the thing here is that when we talk about the more beneficial option available if you do have a dependent is to file using the head of household filing status. And to file as head of household, you must have a qualifying person for head of household purposes and meet the test to use head of household status. So in order to use this filing status, you must be considered unmarried and maintain as your home a household for the qualifying person for more than half a year, or maintain a home for your parents you can claim as a dependent. Your parents does not have to live with you. You cannot claim your spouse who lives overseas as a dependent, but you can claim other people who are U.S. citizens, U.S. nationals, or U.S. residents, or residents of Canada or Mexico. The qualifying person must meet all the rules or head of household status is unavailable. And in many cases, this is actually the most beneficial status available when you are married to a non-resident spouse because it is accompanied by lower tax rates and additional deductions. Just remember, this status also requires your dependent to have a valid Social Security number or ITIN. Let's talk about the third option, filing married, filing jointly. So basically, the final option to make an election to treat your non-resident spouse as a U.S. resident for tax purposes. And making this election allows you and your spouse to file a married filing jointly tax return. And filing married filing jointly will allow you both to take advantage of lower tax rates and deductions that are otherwise not available to married filing single filers. However, it will also subject your spouse's entire income to U.S. taxation and possibly subject your spouse to other informational reporting requirements. Okay, so it's important. So you have, for instance, FBAR and Form 8938 filing is required if you file married filing jointly. So practically speaking here, this status is most beneficial if your spouse doesn't earn any income or otherwise have any accounts or investments that may cause negative tax consequences from the U.S. side. One additional hurdle for choosing this option will be the requirements for your spouse to obtain an individual taxpayer identification number if they're not eligible for a Social Security number. So both spouses need to have either a social or ITIN. And applying for an ITIN requires you to gather additional documentation that must be sent to the IRS. It could also cause delays if the processing of your return. That's why I was just telling you earlier, it's better to take action right now, or let's say before tax season starts. That way, before you actually get to this situations, you would have solved a lot of the challenges beforehand. Thank you so much for your attention. I really appreciate it. In today's conversation, I was just talking to you about claiming a non-citizen spouse and children on your taxes. So I gave you the overview, the pro tips, the bonus, the approach, and now the recap. Thank you so much. God bless you. I'll see you next time. Until then, remember, stay marvelous.